Hey, Jamie Dimon, fuck you. That and much more today on Money Never Sleeps. Welcome back, everybody. Hope you're having a great day. Unless your name is Jamie Dimon or Elizabeth Warren, you two can go kiss my ass. Before we get going today, do us a favor, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. Please do your own research before making any buys or sells. Kevin, I want to start today's show by giving a special shout out to all my friends out there, all of the criminals, the drug traffickers, the money launderers, the tax avoiders who use crypto, as Jamie Dimon likes to say, because that is all apparently he thinks it is good for. At least that is what he's going to testify to. How are you feeling on this wonderful hump day?
Well, it seems like your ass is being kissed by two people. I have a bunch of people I could say that can kiss mine, but yeah, Jamie Dimon. It's pretty interesting you were saying that. I think his words are just as fun as superstar cocky mushroom cut. I don't know. It was not really a Bob. It looks like a Robert. Janet Yellen, absolutely insane. Yesterday, saying that people who were deniers of the soft landing, you're gonna choke on your words. Like, what are we doing here? This is, I mean, this is so stupid. Some of the things that we're hearing in the past 2 days. I'm doing great, despite all the bullshit and everything that's gone on in the market. I think it's a really interesting day. I think there's a lot of signs that the music is slowing down, and that's not necessarily something that a lot of these people that are testifying or saying stuff in the headlines want to see or want people to realize. And we can go into any of the data today. I mean, there's a plethora of things that we could talk about that just show this at this point. We're starting to see the cracks in the system.
Yeah, we sure as hell are. That was a really interesting. I don't want to spend too much time on Jamie Dimon, but I mean, what a disingenuous douchebag. Like, of
He sounds dumb
course,
though saying it too, right?
like he sounds so stupid, and he's talking out of both sides of his mouth because it's not like they haven't been offering crypto services for years, and like clearly the banks are going to say that they're against it because it hurts them. People being able to control their own money, that's the bank's worst nightmare, because people are going to want to get their money out, and guess what? It's not all there. So good fucking luck with that one.
He does have a point to an extent, I will say, because obviously the fucking main infrastructure of all of crypto is 100% ran by an absolute coordination of exchanges that are fraudulent, that are, pretty much committing to some extent or have some exposure to some of the things that he's accounting for. However, most people that do use crypto, dude, they're just hoping the fucking price goes up. They don't give two shits about, sending money to other countries under sanctions and shit like that. That's the we're talking about high level. That's what he's talking about. But for the most part, none of the people below the main exchanges, for the most part, that have KYC care about any of that stuff. They just want to make money.
Yeah, absolutely. And a lot of us want to also like control our money too, like not having to be at the behest of these giant banks who I don't trust. Like I trust them as far as I can throw them. So that's really my prerogative there. Let's talk about jobs week is rolling on. All of the economic data this week is focusing on the labor market. So we had the private sector employment data today. Expectation was for 128,000 jobs being added in November. Previous month was 106,000. Well, this report came in well under the expectation at 103,000 jobs added. The market initially responded quite favorably to that today, and things have taken a little bit of a turn. If we want to pull up the charts, we can see NASDAQ started the day off very well. That has turned around abruptly. Tech is taking a bit of a hit here for the most part. NVIDIA down on the day. Coinbase, Jamie Dimon's testimony, nice little way to hit the price of Coinbase a bit. But the jobs market is what everyone is really focused on right now ahead of Friday's huge unemployment report. When you look at the charts here, like what do you think was that, that tipping point earlier today at around the, I guess, 9:30 a.m. Eastern time, spot? Like things opened up good, and then it took a bit of a hit.
Yeah, man, it's really interesting because I looked at the market this morning and I saw how they were positioning themselves. I'm like, okay, they got 2 days worth of bad data that kind of point to the fact that the economy is slowing down. At least the labor market is, starting to show signs of weakness to the point where, maybe people aren't necessarily needed for as many jobs, right? And we got this ADP data today. So I'm thinking that, okay, maybe the markets are going to say, you know what, screw it, we got the bad data. We still know that the stock buyback window is Friday. Let's just buy into that and, maybe push the price up. 9:30, like you said, we got this massive red candle. So this price was all the way up here, and then it wasn't. I mean, that's just probably the best way to say it. I mean, it's nothing crazy. It's 0.05% down, but it's 7.35 points, and the market dropped right back to it. And we can see that we're, trading roughly where we were trading yesterday. So I mean, it's a good move. We're down. This is the Nasdaq right here. Let me see the S&P. Yeah, I mean the S&P. We're seeing the same exact candle across.
Overall, we're pretty flat on the day. What is doing decent is the dollar. I mean, if we look at like how the dollar is on a 6 day winning streak right now, after hitting down to 103.9 a few days ago. So it's not up anything insane, but we're seeing that slow move up in the dollar as volatility. The VIX is back down under 13. It's a really weird market, and I still hold to my assertion that less is more right now.
Absolutely. I mean, it was last week I was looking at dollar contracts, right? And I was saying that I was getting really bullish on it just because of a lot of things that were happening outside the charts, which is why you kind of have to do more than just look at the charts, right? Because the charts tell you one thing, but you do know that there's a lot more that goes into this. And there's a lot of fundamental reasons why the dollar has a really good shot of going up. It's doing really well right now. But at the same time, we use the technicals to see where it would bounce from. Bounced off the lower trend line, and it broke up through here. Now we're finding resistance on the 200 EMA on the daily. Really interesting to see what happens here. But if we look at some of the Forex stuff that's going on globally, we can see that the euro is collapsing against the dollar, right? I mean, I still anticipate that we're going to get a bounce at some point just so we can continue this wave count, because I think it is going to trade in, Elliott wave theory to some degree, 5 waves down from this as we look at the larger picture. So this would be our wave 3 that we're anticipating 5 waves within that. We haven't got the first bounce yet. I'm really interested to see when that happens. It's extremely oversold on the daily. We do know that there's a lot of things going on in Europe that are going to impact this. Germany is pretty much in an all-out depression. When we look at some of those factory orders that came in today, absolutely disgusting how bad those were. But we look at the yen. It looks like it's finding support right here. So there's a good chance that the yen can continue to rise. And that kind of lines up with what's going on in the Asian markets. We'll talk about that in a second as well. And then we can just see that the yuan is starting to rise again. It's above the 200 EMA. Probably going to see where it goes from here. I mean, this could stay overbought for a period of time. The 50 is probably going to come down closer to it. And if we don't find resistance on this 50 and we break through it, then that pretty much means that it's support and we can see the yuan continue to rise again. All that's just leading up for a really strong dollar here. And even the gold right here, I mean, this is had a really good move to the upside, then it came down. Sure, it's coming up here right now. I think there's a good chance that we could see gold go down once again when we look at this on the macro. Weekly is overbought. Monthly, I mean, it's going to be overbought by the time we get to December, regardless of wherever this red candle is. It's going to be just enough where we can consider it overbought, and it's within this channel. So when I look at this across the board, we're seeing equities peel back a little bit, not be as strong. I mean, it's pretty obvious why the dollar is doing extremely well here.
Yeah, let's talk about Bitcoin for a second, because we've definitely seen some movement up there. We saw it wick up to like exactly 45K and come right back down. I'm going to look at this on like the 5, because I found on the hourly it was like 5 Eastern yesterday. So I'm going to look at this on like the 5-minute chart and see, like, because it had to have gone straight up and then right back down. Yep, there it is. So went up, and then within a matter of minutes, it was back to like 44.4K, which is still, very high number for Bitcoin at this time, but it's pretty wild to see that huge of a wick up.
I can't see what I'm looking at on the 5-minute chart. All right, here we are. Yeah, so this is where we were, right? This is what we were looking at?
Yep.
Right
yesterday,
here.
5 right Eastern, we saw that wick up to 45K. That was crazy.
Yeah, man, that's what's going on in this world. But yeah, it's a nice move to the upside. I wanted to talk about Bitcoin a bit here because it's just something that you have to keep in mind sometimes when you look at this, but this price has gone up nonstop, right? And the thing that's really interesting is we never backtested any of the levels in 30Ks, right? in the 30s, we never backtested anything. We never went back for a retracement, nothing. We went straight through the 30s to the 40s. And that's something that's bothering me. It's bothering me, and not because I'm a bear, but it bothers me
because
because
you're a bear, and this is a super cycle.
and fuck the super cycle,
Super
man.
cycle.
Did you get that out of your system?
Yeah, I got it out of my system.
All right. I mean, I don't care. I think it's funny that people are calling it super cycle. I enjoy people getting excited about the markets. I just think that they might be excited for the wrong reasons. Anyways, if we look
I'm
at this,
envisioning Kevin right now when everything inevitably falls to pieces, like Cartman in South Park, like trying to lick people's tears. Like when he drowned that one kid's parents and made him eat him in like chili, and he was like, "Let me taste your tears." That's what I'm envisioning Kevin as. If we see a drop, a huge drop in Bitcoin.
all right. I don't know if I'm going to be that much of an asshole. I think I'm just going to let the market humble everybody at that point, because let's put it this way: grown men will cry once they realize what's coming their way, right? We'll talk about oil in a second, and also the Asian markets. But when we look at this here, we never tested anything back in this channel. I mean, this was just nonstop climbing. I mean, you could say, yeah, we backtested this parallel channel. I'm not talking about that at all. When we look at this, I'm talking about we've never came down significantly to a point where we filled out any of these gaps. It pretty much just shot up from the high 20s through the 30s, and now we're at, we wicked all the way up to close to 45. This is not sustainable in any way, and I don't know how people could say that we're going to build a foundation on this moving forward in any super cycle or any reasonable bull market that we're claiming to be in. And once again, we just zoom out a little bit and we look at this move, guys, volumes are gone. Volumes are 100% gone. So when I look at this, and we're also seeing, Shiki Crypto, great YouTube channel. They do really good work with finding how many people have Bitcoin wallets with a certain amount of Bitcoin in them. They were talking about it yesterday, saying that, not necessarily any new wallets have been added to the point where we can arguably say that institutions are accumulating at these levels. And what they're probably saying is there's institutional level. When I talk about institutions in this regard, I'm talking about exchanges that are doing a transfer of wealth between, what they have to what retail is willing to buy. And we could see some supply changes that definitely impact the price of these assets on the exchange. And that kind of lines up with what I'm saying with Tether and a lot of things that are going on there. And that's why this price action is so fishy. The fact that we never tested anything in the 30Ks, it's like we never had a chance to. And I mean, that could be just, sour grapes, but super cycle. It could be sour grapes, right? That, this thing just keeps going up. Sure, maybe. But when I look at this here, I just think about, back when we were at 30K, we came down to 25. When we came up to 31, we came down to 25. 25, obviously, that's something to keep in mind there. That's a level that they didn't want it to go below. And this time around, it just hasn't. It's a really wild situation when I look at Bitcoin and I look at how high dominance is right here. And I'm seeing people, all the influencers, who are saying that Bitcoin dominance doesn't necessarily matter. Eventually, it's going to bleed into the alts, and the alts are going to have their alt season. And some people are even saying alts already had their alt season. What are you doing? You're sitting on the sidelines. It's like, we are just talking about just like, I don't know, fucking crazy shit here then. Because I
We're
see
like
this.
moments away from Bitcoin dominance being at 55%.
And it was at 55% yesterday too, right? I mean, the fact that it's still hanging around here is very concerning. If we look at some of the alts, we're not going to have to get into them, but they're not moving up. I mean, they're moving up very little. I mean, ADA is having a 4% day. It's pretty good. But for the most part, everything's right across the board.
Avalanche is crushing it today.
AVAX, let's take a look at that.
AVAX is up almost 11% today.
Yeah, it's having a good day, isn't it? Damn, that's pretty good. Oh, no, I'm looking at AVAX market cap. Still, I can tell that it's doing pretty well there. Let's do AVAX Coinbase. 27.22. It's really interesting, man. I don't know. I mean, I can't tell you that it's not going to stop going up.
That's one that is on my DCA list is AVAX.
Oh yeah, dude, AVAX was amazing. I loved AVAX in the last bull market, but here, I don't necessarily know how many people got hurt with AVAX when we saw that massive dump. I mean, just take a look at this right here. It's on the daily. Look at this massive dump we got in April. I mean, this is from $81 all the way down to, let's say, $13. And people are getting really excited at this level right here, this little pump to the upside. Maybe, I guess. But if you look at the monthly, daily's overbought. Weekly's overbought. Monthly, Look at that. It's going to be overbought soon. And if you just put this into perspective, look where you are compared to where it was. So I mean, that's something that people just need to keep in mind too. But that Bitcoin dominance is probably the scariest thing out there. I think when I look at crypto, and just the fact that Bitcoin's had no resistance whatsoever going to the upside, very scary. I think that when it does retest, it's going to be pretty bad, pretty bloody. I'm still not convinced even that, I know that CZ and SBF probably have a lot to say right now. I'm not convinced that this gets solved in a reasonable way. That's all I'll say. And everything comes back to liquidity. So just be very cautious. I think the crypto market is pretty much building itself a doomsday machine, device, whatever it is, that's eventually going to blow up from the bottom all the way to the top. This is just not something it's not a structure that I think is stable in any way. And I can't lie to anyone or myself and say that, oh yeah, it's a great time to buy. Again, not financial advice, but there's nothing I see here that makes me say, you know what, there's has a lot more room to the upside. I mean, shit, 69K is not that far away. If we look at we're 20,000 away, and how much it shot up recently, what, 26, 27,000 all the way to 44 in a matter of a month or so. It's fishy as fuck, guys.
I'm looking back because we're on an 8-week winning streak for Bitcoin right now.
Yep.
And I'm going back and I can't find a winning streak this long. I'm now back in the year 2019. Still can't find a winning streak this long on the weekly. Maybe this. Yeah, the last time we had an 8-week winning streak was 2017 on Bitcoin.
It's so fucked, man.
That's crazy. Like, that's just crazy to me. Like, I don't know what to take from that. It's just wild that even, in all of these years and in these, like, with how crazy shit is, and in that 8 weeks, Bitcoin went up 160%, but that's when it was back in the, the
early
1100, the 1,000 to, $3,000 range. But with how, like, bad things are for a lot of people, to see Bitcoin to continue to have this kind of, what the fuck did I just do on my trading view? Jesus Christ. Oh God, I just ruined everything. What
no
the
worries.
fuck have I done?
I'll cover you, man. So
okay. Anywho, I'll come back to that. Anyway, go ahead.
It's just, I mean, when I look at this and people are saying, I'm seeing tons of people also say that Bitcoin and gold are going up because people are afraid of the system and the risks for liquidity going forward into 2024. We talk about how the banks are positioning themselves, how the reverse repos are doing something that they haven't been doing in a while, which is drain the fuck almost to zero. A lot of people are saying that Bitcoin is a safe haven. We don't know that. Guys, we don't know that at all. There's no guarantee that Bitcoin's a safe haven. This is literally the first time that we're going through a recession, right? You can say Bitcoin might be made for this, that it's recession proof, but guess who's not? The institutions that have money in Bitcoin. And if it comes to a point where there's mass liquidity, everyone's trying to just scramble for dollars, then guess what? They're gonna give two shits about Bitcoin. They'll buy it later at some point. Let's not forget that there were institutional players, people with thousands of Bitcoin in their wallets that sold back at FTX. They haven't got back into the game, even as the price has been pushing up. So what do I think this is? I think this is 100% is an exit pump. It's no different than what we saw a month ago with Binance. We knew that Binance had something going on. They got out of the market. All their friends got out of the market for the most part in that pump. USDT just went crazy. And then we got the news about Binance. And now we're getting to see the pump coming up once again. I sound like a crazy man just saying Tether and Binance nonstop, but I know that I'm not wrong. I sat in a short for Binance for 7 months. Let's put it this way. Eventually fraud does catch up with you. It's hard to show people it until it actually happens in front of them and it's in a way that impacts them. Otherwise, people don't necessarily care, which is unfortunate.
All right. What else do we want to look at on the crypto side? We can talk about oil for a second. I mean, that is just taking a complete
let's talk about oil,
nosedive. Just a brutal stretch here for oil.
Yeah, I'm gonna get rid of these wave counts because at this point it doesn't even matter because we know where it's going. There's no demand, guys. This is oil on the weekly.
Bloody. 7 weeks in a row, oil's down. It's nuts.
Yeah, and while Bitcoin's going up, right? It just goes to show you that there's stock market and crypto is a lagging indicator into what's actually going on in the economy. This tells me that demand is actually falling off a cliff. I talked about us being in the 60s fairly soon. Here we are. I said a month. It only took 5 days before we got there. It's at 69, great level. I'm not surprised if we go into this election and we are in the 30s. I truly believe that. Again, not financial advice ever, but this is very concerning. We got a death cross. You know what? We didn't even play it. Where are we? Look at that. What is that, J-Web? What's that on oil?
Oh, it's a death cross.
Is it? I think so.
I fucking
Man,
love this so much.
fucking oil. You got the death cross. That is not a great thing to be looking at right now. Is there the potential for a squeeze here, push to the upside? I still think that there is always a potential for a pump to the upside, whether it's OPEC cutting or something bad happening. We should have known when the Israel Hamas war began and oil kind of tailed off right after it. That should have definitely impacted the prices, but that just shows you that there are issues out there that are impacting oil prices greater than regional conflicts, and that just is not necessarily a great sign. And even when I'm sitting here right now thinking about where we are in the market and also time wise with seasonality, we know that this is the time of year where there's the most travel. I am so intrigued to see how the numbers come back post Christmas, post holiday season, and we see how airlines did and how all the other forms of travel have done, and even just production in general, because obviously you need that with crude oil, and see what's happened and how this oil market just absolutely reacts. Because it doesn't matter if they keep cutting, guys. If people don't have that demand, this thing's going down even further. I mean, it's eventually it will get to a point where they are going to have to lower it to the point where the people do find, okay, this is, I could buy gas at this level, I could travel, it'll come. But right now there's not enough discretionary spending that makes people want to travel nearly as much, and help out the industries that are impacted by oil. I was going to say U.S. oil, but oil in general.
Get that train coming by right there. Okay, so we got the update on oil. We heard about Bitcoin. We discussed Avalanche. Anything else on the technical side before we wrap it up today?
Yeah, man, let's just go to Asia one last time, because we didn't talk about them yesterday, and I think it's really interesting what's going on over there. So last night, first off, let's look at this fucking Nikkei chart. Guys, these are all the gaps that the Japanese Nikkei has. All the ones that I could find from COVID and onward.
It's like your computer's dying based off of that chart.
I
Like
know, dude.
all the red lines. Looks like something's about to, like, your computer's gonna blow up.
It definitely could. Let's put it this way. I counted, I think it was like 21 or something. I know I'm missing a few in here too, but this is just for visual representation to see what's actually going on over there. But this thing has just been puking to the upside since COVID, right? And just think about it. This is where it was when it crashed, and this is where it was back when, right before the crash. This is when the economy was actually starting to slow down. A lot of people don't remember that, but back in 2019, the economy was starting to slow down. There was a lot of cracks in the system, and then we just got this massive black swan event, took everything down with it. Now we're trying to grind our way out of it. However, you printed too much money, and now we had hyperinflation. Now the rates are high. The banks aren't extending credit. Now we're going to start seeing a huge contraction in the economy. The rates are extremely high, and we're also seeing a lot of things start to tell us that we're seeing pretty much deflation. But when we look at the Nikkei, look how high this is. This is absolutely insane, and it was pushing up nonstop. Even every time it gets rejected, it just keeps coming right back up. And we also see that the Japanese yen has been going up significantly this entire time. This tells me that they're probably just printing tons of money, which just kind of flooded into the market. It's no different than what we were doing. And we saw all that discretionary cash flowing around. And it's like, yeah, let's throw it into the market and investing. However, now we're starting to see some issues, because we know that they can't sustain this yen being at the current prices. But at the same time, if they want to keep these values up and not have any type of liquidity crisis or liquidity run, I mean, it's kind of this limbo that the Nikkei has to sit in. And it's really dangerous, in my opinion. And I think a lot of this does tie in with some of the other corporations in Japan that might be financially stressed right now. Won't say who. You kind of have an idea of who I'm talking about. But if we look at the Hang Seng, which is China's index, where are we? HSI? No, that's the VIX. HSI, completely different story. Look at this. Absolute opposite of what's going on in Japan. We're seeing that they printed so much money, but there's so little demand, and even out of COVID, everything just kind of tanked. I mean, where's the COVID low? 2020, right? Mm-hmm. Guys, that's right here. Here, let me do a line right across so we can see it for visual representation. Let's turn that white and make this thick. Look at that. That's where we are compared to it. We are about 22% below where we were during the COVID low. That is not a good sign. That is absolute deflation. We're starting to see just demand absolutely dwindle. And again, a lot of that has to come with, the fact that they're not exporting goods. If they were exporting more, their yuan would be a lot stronger. We'd probably be seeing the markets not necessarily tail off as much. But we're seeing the exact same thing where, economies are struggling, but we're seeing the stock market or their indexes do the inverse of one another. So when I see this, it shows me that there's a lot of trouble in China. First off, to even just be this low once again, and we haven't even seen the fire sale of Evergrande or Country Garden or any of those. And we know that even Moody's downgraded 8 more banks in China from a positive or stable outlook to negative. We know that eventually there is going to be some type of event that just absolutely tanks the market. I don't know how much of this is priced in right now when we look at the Asian markets, but it's not great. It's not great by any means. I think there's a lot more downside pressure if we look at the Nikkei, and even if we want to look at the Japan, if they end up getting really wrecked from this, let's look at where the Nikkei was back in the 80s. It's all the way up here, and from 1989 all the way to the Great Financial Crisis, the Nikkei absolutely tanked. It was down roughly 82%. Could we be getting to the 80s levels and we get into a point where they absolutely destroy the Japanese economy? And we just got decades of just absolute pain coming for Japan. I mean, how does that impact the United States too when they have the most amount of our debt? It's a really scary thing right now. Just keep an eye on that. I think it's not something you're going to see necessarily in the charts when people are talking about trading, but it is something that we have to keep in mind, because if Japan or China has problems, the United States most definitely will find those problems. Last thing I do want to pull up as we head out, it's the 10-year, but I forgot to 10-year yield, 411. The 10-year is at 411. It's not too far off from being back in the threes. That is very scary, because that shows that people are saying, you know what, assets right now, extremely overweight. I want to lock in these gains for next year because, let me just take some money, move it into the treasuries, feel safe, because I don't know what's going to happen next year. And that kind of lines up with what the banks are doing, just hoarding cash nonstop. So very interesting stuff, very scary. I don't know if people care about this until after the holidays, but we're seeing definitely signs that the music is slowing. And eventually when it does come to a halt, everything's going to break.
It's the holidays, man. Go out there, go spend more than you can afford. You can pay it back later with these high interest rates. Everything's going to be fine. Okay. Buy now, pay later.
Hey, man, I'm just getting so many flashbacks when I hear Janet Yellen talking like Hank Paulson too. Like, the economy is resilient. Meanwhile, we find out we've been in a recession for like 4 months at that point. It's just
I mean, when Janet says one thing, the other is true. Jimbo, Janet, Jamie, all the Jays, all my fellow
Jerome.
Jays can oh God, they can all fuck off. All right, that's
Joe.
gonna do it for today's show. Appreciate you being here with us. I'll be out the next couple of days, but do not fear. Kevin and Mr. House are going to be holding it down. Appreciate everybody for joining us today. Randy, Ace, good to have you guys with us live. If you have not yet, do us a favor, hit that like button, subscribe to the channel, drop a comment, share us out on social media. Appreciate you all. Have a great rest of your week. I'll see you next week, but Kev's got everything under control until then. Have a great day. Take care.
Take care, everyone.